guys, Forex Last Word GBP Forex. Welcome to our Forex Daily Technicals for 7/16/13. Taking a look at some key levels in Euro, Aussie, and the Pound. As always, trading foreign exchange on margin carries a high level of risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully and to understand all the risks associated with trading Forex on margin, and seek advice from an independent financial advisor if you have any doubts. Well, let's take a look at the charts today. It's been a relatively quiet day, and we're holding near some key levels here, especially in the Euro. With the 131 kind of capping the upside, but the 130 really holding the downside for the third day in a row. If you look at the dailies, this is the hourly chart, but if you look at the dailies, the 130 is essentially, we had this big breakout, and the 130 has really sort of held any kind of a retrace in the post-breakout era. So it looks mildly positive, mainly because they've been buying up the 130s for the 3 days in a row, but it really needs to take out the at least the 32 highs here, which is the swing high that we established in that squeeze 3 days ago after the Bernanke conference. It'll be interesting, I guess. Maybe it might have to wait till Wednesday till Bernanke testifies and sort of reconfirms a more dovish tone. That would give Euro more of a push, obviously. Could possibly clear us through his 32s, and if we go through the 32s, it really opens up the prospect, because as you can see, this 32 was a long overhead level here from April. So if we clear this, then it does open up the run all the way to 34s for a test of the double top at the 134 level. So it's really an anti-dollar move in every which way possible. The anti-dollar move was certainly very evident in dollar yen today, where we had a big, strong buy up all the way throughout the day. Let's take a look at the hourlies just to see this very clearly. You know, big, strong buy up all the way throughout the day, and then boom. Sorry, where am I? Right over here. Got buy up all the way throughout the day on the hourlies, and then the retail sales number came in horrible, and it just brought us right back below the hundreds. So on a daily basis, we sort of even on the 4-hour basis, we kind of flamed out on the at the 100 level, and that's not positive. And you can see that that right now we're still basically making lower highs, sort of a distribution top in dollar yen. But the key thing to dollar yen to the downside is the 99 level. So far, 99 level has been holding. If we break 99 to the downside, that creates a much stronger case for more bearish bias and further deterioration all the way out to the 96s. Until we kind of break 99, it's still more or less constructive for dollar yen. Although the fact that we couldn't hold the hundreds, of course, is not very positive. Anyways, it kind of feels like all of this is just background noise until we get to Wednesday, when we actually get some kind of movement from the Bernanke testimony. And if he does continue to be more dovish, that perhaps that could resolve to the downside in dollar yen, upside in euro dollar. Pound dollar, similar kind of story as the euro dollar, where it's hanging between these two very key levels. In euro, the key level is 30.31. In pound, it's basically 50.52. That's been the capping stone for the pound, but 50 tends to hold. Again, very much trading on sort of anti-dollar trade rather than any kind of intrinsic value for itself. The last trade, which is kind of interesting, is the Aussie dollar, because the Aussie, of course, has the RBA minutes tonight. 90 was tested and then recouped, but 91 is kind of being capped right now as the key level. This 91.90, sort of, frankly, 92.90, that's the zone here. It's 92.90 as the key zone. The edges of this zone could resolve into a more directional play. So if we break 90s to the downside, off of, let's say, very dovish RBA, if that's indeed what happens, then you have the potential here for obviously further downside action. And that by the way, creates lots of interesting cross opportunities. So we've talked about the euro odds. Where's my euro odd? Which, if Aussie breaks 90, of course it has a potential then to take out the 145s, go to swing highs over here. And similarly, sort of a similar idea. Let me just point this out. Not a cross that's traded a lot, but it's definitely showing similar kind of signs of. This is Aussie Swiss, right? And Aussie Swiss has similar kind of support here at 85, and again, a very weak move in the Aussies below 90 could break the support at 85, and that becomes a very strong move to the downside. Conversely, and this is another interesting thing, is to sort of think about this in the reverse way. If RBA is not dovish, if it basically sort of says, yeah, we think the economy is slow, but no chance of us lowering rates anytime in the near future, that could push the Aussie higher. And then, given the fact that you have all of this support levels here, this could be an interesting trade to the upside as Aussie recovers some of its losses over the last few days. So that's kind of how things are shaping up for the day. Wishing you guys the best of luck and the best of trading. We're all waiting basically for Wednesday until Dr. Bernanke testifies in front of Congress, and that's when the volatility should most likely occur. Otherwise, best of luck and the best of trading. Boris Schlossberg for BK Forex over now.